Hello and welcome to Market Vision's module on mutual funds. This is Deepak Shenoy taking you through how mutual funds are priced and how the net asset value of a mutual fund is calculated. So here's how it works. We studied in the first module that initial investors pay money into a mutual fund. They buy units, and this is usually priced at 10 per unit, which is called the par or the face value, and this is a new fund offer. Alright, so the fund that takes the money takes and invests it into whatever it wants, stocks, bonds, derivatives, whatever. And the prices of these instruments change every single day. Stock prices and bond prices go up and down. So what happens then is that the mutual funds portfolio is marked to market, and we'll explain that with an example here. Now assume there's two investors in one fund. It's a single fund, two investors. This is not reality. In reality, regulations don't allow just two investors. You have to have many one, and you can't have one investor owning a substantial percentage of a fund and so on. But just for an example's sake, let's take there's a guy called Rahul, and he's put in 10,000 rupees. He gets 1,000 units at 10 rupees per unit. And Paul invests 90,000 rupees, gets 9,000 units. And of course the total then is 1 lakh rupees, 100,000 rupees with 10,000 units. So the net asset value is simply the total amount that's in the fund divided by the total number of units, and this ratio is just 10 rupees. So when you look at the fund itself, it takes this 100,000 rupees and invests it. So what does it do? It first buys 50 shares of Reliance at 1,000 rupees. It's 50,000 down the line. It buys 16 shares of Infosys at 2,500 rupees. It retains cash at 10,000 rupees, and this adds up to the portfolio of 400,000 rupees. And if you look at it from a portfolio perspective, they've got 50 shares of Reliance, 16 shares of Infosys, and cash of 10,000. This adds up to 100,000 rupees. Assume prices have not changed after they have bought. The NAV remains the same on day 2, right? So what happens on day 3? Let's say it's a fantastic day for the markets. Both Reliance and Infosys go up 20%. Okay, and there's a management fee, a small fee of say 2% a year divided by 365, because you've got on a daily basis this is calculated. We calculate this for 2 days, and therefore now the portfolio becomes slightly different. The 1,000 rupee Reliance share has changed to 1,200 rupees. Similarly, Infosys has gone to 3,000 rupees, and we have cash of 10,000 that remains exactly the same. Subtract the management fee. There are some other charges that may be applicable. I've not added all of those. I've seen now that the total comes up to 1,18,000. To be precise, 1,17,988 rupees and 5 paise. The number of units is exactly the same. We've not had any more investors in the fund. So the NAV per unit is the total amount divided by the number of units. We have 11.7988, approximately 11.80. The 4 decimal points is to highlight the fact that you've got a lot of units, and then you don't want to lose the fractional point of you don't want to lose something in the translation there. So the net asset values from an investor perspective is basically their ownership of the fund now goes up because the fund value has gone up. In rupee terms. So new investors from now on can't buy at the 10 rupee price that Rahul and Paul bought at. They can only buy at the new net asset value. So Rahul and Paul have 9,000 units at the new NAV. Their values are approximately 11,800 and 1,06,000 from an investment of 10,000 and 90,000. So they've seen an increase in their investment. We've seen the stocks went up 20%. The net asset value went up only approximately 18%. So 11.798 is nearly 18% higher than 10 rupees. Why is that? Because they had cash of 10,000 rupees. If they had invested the full amount of money in the markets, the entire NAV would have gone up 20% minus the small management fee. But in general, because of cash, they will lose a little. They will not make as much on the upside, but they will not lose as much on the downside as well. So here's how you can see how mutual fund pricing works. Now NAV prices like this are declared at 9 p.m. every day for most funds. or well, for all funds, for all practical purposes, where for most funds you can buy at today's price up to 3 p.m. That means you can buy, if you put in an order at 9 a.m. in the morning, you will get today's net asset value when you purchase the fund. If you sell also, you will get today's net asset value. uh, After 3 p.m. it's tomorrow's net asset value. The idea being that before 3 p.m. they can actually do something about your transaction, but after 3 p.m. there is very little opportunity to be able to do anything today, so they'll have to do it the next working day. There is usually a small amount of cash. We saw 10,000 rupees of cash in our example. So if investors had requested redemption of 10,000 rupees, the fund, Rahul may have said, okay, give me 10,000 rupees back, and the fund would take the cash component and give it back to Rahul. But let's say both Rahul and Paul said give me 10,000 each, then what the fund would do is say 10,000 we've already got from the cash component, we will sell a little bit of either Reliance stock or Infosys stock or both in similar proportions, take that money and give it back. Right, so if you've got cash sitting in the portfolio, it's usually held, a small amount is held for redemptions, and the remaining, I mean, if funds have high cash components, they pay out dividends usually, and we'll talk about that in another lesson. You can buy and sell fractional units, just like NAVs are in 4 decimal points. The number of units are also in decimal points, so you can always buy 1,000 rupees worth of a fund regardless of how much that fund's NAV is. You will in this case get 84.7544 units. The number of decimals allows them to give you a unit quantity that comes as close as possible to the amount you've invested. And that is it about mutual fund pricing. We would love to hear your comments. Please visit our forums, email us lessons@marketvision.in, and we'll soon talk about dividends and growth plans in mutual funds in a coming lesson. Thanks for listening.